So I was up more than 150,000 in profit on Kraken Robotics, and I did sell some, but I still own a lot. So what am I doing? Well, whenever you buy or sell something, you should compare it to the default, which is the S&P 500 index. And normally it's 15 to 16 times earnings, but now it's 30 times earnings. So whenever you buy anything, including Kraken Robotics, I think that's a good mental check on yourself. So I've done okay. This year, I've underperformed the S&P 500 index in my main account, which is with Merrill. But if you look at it on a 3-year basis, I've outperformed 113 versus 94, or a 5-year basis, I've outperformed 175 versus 113. But I don't have Kraken Robotics in this account because up until recently, I couldn't trade Kraken on Merrill. It wasn't available. So I only traded it on Schwab. And on Schwab, I'm doing pretty well. Last year, I was up 114% versus 15% for the S&P. And most of that is because I had $30,000 in Kraken Robotics, which grew to 170,000. And then I trimmed some shares to take some chips off the table, but I'm still up 400% on that, and still up 100,000 on what's left. So my original position in Kraken Robotics was 29,000. I've sold about 40,000, and I got more than my original money back, and then I still own 123, which is fine. I'll take it. So if it's such a good company, why did I sell? Well, on these smaller, riskier positions, I try not to have them too big. And so I thought 170 was too much, and I thought I would take it down to 100. And as I started selling, the price dropped, so I stopped selling. And if it goes up more, I would trim more. And if it goes down more, I would buy more. But it's at this weird place where I'm either buying or selling. And if you're wondering, do I still think it's a good company? If I didn't think it was a good company, I wouldn't still own a bunch of it. But I'm a cheapskate, so if it drops more, I would buy more. But I'm perfectly happy to sit here and let the thesis play out. So at 100 times earnings, it's more than I usually would pay for a stock, obviously, but it's a profitable company. It's growing. They have I think it was $1.7 or $1.8 billion contract that Anduril landed with the Australian military, and they have a contract to build, I think it's 200 of the Ghost Shark subs a year with the Pentagon that Anduril has. And Kraken Robotics currently provides the batteries for those, which I believe are $2 million each. So even though it's run up a lot, I think even at this price, I'll be very happy with this company in a couple of years. And if it went down, I would buy more. But let's say I thought this was worth $6 next year, and then it went up to $5 next month. I would probably sell because sometimes a quick nickel is better than a slow dime. And as an example, Microcap Club is something that I like to read. So they have a message forum that I'm not a member of, but here's Kraken Robotics. The US ticker is KRKNF, but when they mentioned it was PNG, and it was trading on the Canadian exchange, and they pitched it initially at 23 cents a share, and I believe this is $6 Canadian, but it's 4 something US today. So they're correct that, if you had bought it at 23 cents Canadian and sold it at $6 Canadian, which is about $5 US, that would be a great outcome. However, 23 cents Canadian was in 2015, so you would have to wait 10 years. And 10 years for a 20x is great, but that was a rocky road. And if I can get 400 or 500% in a year and a half, I think that's okay, because I wasn't dealing with it when it was a company that made no money, when they were issuing shares and diluting and things like that. I found it when it was profitable and during that brief window when it was trading at a reasonable valuation, and then I pounced. Because it's pretty easy to find companies with cool tech that had no profits, just like Kraken Robotics was when it was 23 cents Canadian 10 years ago. And I'll give you some examples. This is a message board that I go on, the corner of Berkshire and Fairfax. And this is a company that I wrote about a little over a year ago when it was about $1 a share. And what is it now? It's $12 a share, right? So why didn't I buy it back then? Well, it's one of those companies that is a company with cool tech but no profits. So it's what they call a story stock. So it's not trading at 32 times earnings, it's trading at 32 times sales. So not for me. And here's another cool company with cool tech but very little sales, Enovix, that does sort of the same thing. And that sort of hasn't gone anywhere. So one that did well and one that didn't go anywhere. What do they have in common? Cool tech but no sales. And how do you predict which one is going to be the one that does well and the one that doesn't? It's hard to tell. And here's another company with cool tech. And I invested in this too early. It's kind of cheap now, but I sold out after 5 years. I lost patience with this. And here's one that I looked at when it was 67 cents. I did another post on it on that corner of Berkshire, and now it's 218. So 2,000% in a year. It would have been a 10x in the past 6 months. So why didn't I invest in this one? Same thing. 11,000 times sales. So they have cool tech, but no customers. So this is just driven by market noise. And sometimes you get lucky on those and sometimes you don't. And if you have a basket of those, maybe you'll do all right. But, you know, trying to pick the winner out of those is crazy. But Kraken, and this says it's a P of 85, 84, even though Schwab says it's 100. But at 84 times, if they really will get to continue to be the supplier for Anduril on those billion-dollar contracts with the Pentagon and with the Australian Navy and possibly other navies, then even at this price, it's a great deal. And people are betting a lot on offshore drilling. And if you are betting on companies like Seadrill or Valaris and you think those are going to come back, then Kraken Robotics should do well there as well, because they have underwater imaging, which is best in class, and that has applications in the offshore drilling and telecom for laying fiber optic cables. So this has several ways to win, and it's got a very bright future. So I don't mind adding to this on the pullbacks, especially since I've taken out my original investment. I put 29,000 in. I've already bought, I've sold 40,000. I've got all my money back, and I still have over 100,000 of house money that I can play with this. And great companies like this don't come along that often, so I don't want to sell. If it got too high, I don't mind trimming, but I think, you know, this will play out for years to come. If something changes, then I will change. For instance, I had a more than a double in a year in a company called Taylor Devices, which is also involved in the drone space. So they make the landing drones, the landing gear for drones like the Predator and Reaper. And they also make what looks like giant shock absorbers for buildings, which help with earthquakes to keep skyscrapers from falling during earthquakes. And with the current administration and tariffs, the drone part of the company is doing well, but the structural part is doing poorly because of tariffs. And so I figured, well, why pay a decent price for half a company when I can just find something where the whole company is doing well? And that's why I sold my shares in this and I went back to Kraken Robotics. But this is another way to play the drone thesis if you think drones are going to be big and you're looking for companies to invest in. So any company that has the word drone in the name or is very obviously drone related is going to be way overpriced and trading at a ridiculous multiple. But if you can find companies like this, Taylor Devices or Kraken Robotics, which make parts for other people's drones, and this is trading at less than 16 times earnings, then you can tend to find bargains there. And I should mention this is 16 times earnings, but they have no debt and they have a ton of cash. So about a third of their market cap is cash. So it's really not 15 times earnings. It's more like 10 times earnings if you back out the cash. And Taylor Devices is an interesting one, especially if you think the structural segment is going to come back, because as I said, people in Japan don't want to do business with the United States because of what's going on with the current administration. And places that have a lot of earthquakes like Japan, they were a big market for Taylor Devices in the structural segment. And the part that makes the landing gear for the drones, the Reaper and Predator, that's still doing great. And, you know, you have to turn over lots of rocks, and the more rocks you turn over, the more good things you'll find. But, you know, this isn't a recommendation to buy or sell Taylor or Hydrograph or Kraken Robotics or Anterix or anything else. This is just me walking through my process and trying to show you why I saw what I saw and how I make decisions about things to buy in the future. And you can't be an expert at everything. So learning about batteries helped with Kraken Robotics and also with Enovix and Amprius, which are also battery makers. So knowledge is cumulative. But if I had to look at a company that made microchips, I would have zero knowledge of that. So I wouldn't have any advantage there. But, you know, if you start with your circle of competence and just slowly expand from there, you can do fine. But if you jump around and try to be a generalist, that might not work out so well. So anyway, this is just me walking through my process. What do you guys think of Kraken Robotics or Taylor Devices or any other ones I mentioned? Just leave a comment below. If you want to support the channel, there's a link for Robinhood where you can get free stock. And that's one of the brokers I use. And if you want to support the channel, there's also a Buy Me a Coffee link. So let me know in the comments and like and subscribe so you'll see future videos like this. Have a great day, everyone.